Joint accounts feel simple until you ask who actually owns the money. Most joint accounts don't work the way people assume. They're not yours and mine inside one bucket. Deposits don't stay tagged to the person who put them in, and ownership usually isn't a clean 50-50 split in the bank system. The bank also doesn't track who spent what, and you generally can't block the other owner's withdrawals. If the account overdraws, it can come back on both of you, even if one person caused it. And while your credit files are separate, the debt from a negative account can still hit you. Here's the core rule. On a typical joint account, either owner can take money out without asking. That's because the full balance is treated as shared, even if one person contributed most of it. Banks may give you separate debit cards and separate logins, but those are just access tools to the same pile of funds. That's also why almost any instruction from either owner can be valid, including transfers and wire requests. Each person can set up their own bill pay, and if overdraft happens, both owners can be responsible. A joint account is great for shared bills, but it's a weak tool for fairness because the bank won't track contributions. Either owner can withdraw, and if you end up in a dispute, it gets expensive fast because the bank usually stays neutral. We agreed won't beat the account contract or clear records, so proof matters. Texts, spreadsheets, and consistent transfers. Also, don't ignore the interest side. Idle cash still earns, and where you park that money can change the dollars you keep each year. Joint doesn't mean you stop optimizing. The biggest risk in joint accounts isn't feelings. It's how fast problems spread. Overdraft hits both owners, and a negative balance can snowball with fees and return payments, even if you weren't the spender. One owner can legally drain funds because they have full access, and certain legal orders, like garnishments tied to one person, can freeze the whole account. Regulation E can help with true fraud, meaning unauthorized transactions, but it doesn't fix authorized spending you regret. If you want protection, ask the bank what joint controls exist before you rely on trust alone. A safer setup is to use joint accounts for coordination, not life savings. Many couples open a bills-only joint account and keep personal money separate, so the shared account stays predictable. Ask whether the bank can require 2 signatures for certain actions, because not all can. Set low card limits on joint debit cards. Turn on real-time alerts and keep emergency funds in an individual account where one person can't empty it overnight. If your goal is passing money after death, beneficiaries can do that without giving someone access today. On most joint accounts, either owner can withdraw the full balance, no permission needed. If you want to see joint and individual account options that fit how you actually bank, BankingHub shows personalized matches and the real dollar impact for your balance. Free, no login, no credit check. Links in the description.